I'm afraid I am going to learn about accounting procedure. This means we will go through every important step involved in accounting. From a moment a transaction is identified all the way to the preparation of financial statement. Just like how we follow a recipe to cook a dish, businesses follow these steps into keep their accounts accurate and organized. This shows us what we are going to learn in this session. We will start with the basics of accounting, then move into the accounting cycle. That's just the full process every company follow to keep its financial records. We will go to step by step, starting from identifying transaction to record them, posting into the ledger, and finally preparing financial statement. By the end, you will understand how a simple business event becomes part of a company official reports. Here is the accounting cycle. The first step is we identify and analyze the transaction. Second one is we record this transaction in the journal. The step 3 is we post them into the general ledger. The step 4 is prepare the trial balance. Step 5 is generate financial statements. We now discuss about step 1 identifying and analyze transaction. This means we look for every event that involves money like purchasing goods, receiving payments, paying salaries, etc. We don't just record everything. We first analyze it is a business related transaction or can it be measured in money? Which account are affected? Is it cash, sales and expenses? Only if the question is yes, we move forward and record in the journal. So, this step is just like choosing the ingredients before we cook. We must pick up only the right useful ones. The second step is record transaction in a journal. This is where we first write down the transaction in date order and its happened. The journal is called the book of original entity. We use the double entry system. That means every transaction has two sides. One account is debited and another account is credited. For example, if a company buys good for cash, purchase account is debit, cash account is credit. This step helps create a clear and complete daily record of all business activities. Step 3 post to the general ledger. Once we have record all the transaction in the journal, we now need to organize them and that's where the ledger comes. The ledger is like a big record book with separate account. For example, cash, sales, rent, salary, etc. We take each journal entry and post into the correct ledger account. This means all cash related transactions go to the cash account, all sales go to the sales account, and so on. Step 4 preparing a trial balance. After posting everything into the ledger, we now want to check if our work is correct and we do that preparing the trial balance. A trial balance is a list of all ledger account balance. We separate them into debit and credit column. If total debit is equal to total credit, it means our entries are probably correct. If they don't match, then there is a mistake somewhere, maybe a wrong entry or a missing transaction. So, this step is like checking your math homework before submitting. It is help us catch and fix errors before we prepare the final reports. Step 5 to Step 8 Adjusting entries, financial statement, and closing books. Adjusting entries. We fix and update accounts to record things like understanding expenses or earned income. Sixth step Prepare financial statement. We create the income statement, balance sheet, and cash flow statement to show business performance. The seventh one is closing entries. We close temporary accounts like income, expenses, and reset them for the next period. The eighth step is post closing the trial balance. We do one last check with only permanent account to ensure everything clean and ready to for the next cycle. And that is the complete cycle from the first transaction to final report, just like a cycle. Counting, keep repeating this every month, quarter, or years. Thank you.